I'm just going to do a quick recap video, and I'll cover all this in a lot more detail in tonight's report um, for subscribers. But I think after today, we can I can say with a lot of conviction that this was daily cycle low, but it was just one that didn't break the trend line, and probably 95% of the time they do break the trend line, but I think this is going to be one of those exceptions where it just doesn't happen. So um, we have, looks to me like we've completed the top. This is going to be a left translated cycle, and we're going to go down to tag that bull market trend line before this bottoms. So here's a longer term chart. Here's the bull market channel trend, or excuse me, the bull market trend line. We're getting pretty late in this intermediate cycle, and I don't think there is a reasonable expectation that the dollar is going to go through this level without first giving us a counter trend intermediate bounce. So I'm seeing a lot of people become extremely bullish on the metals today because gold and the mining stocks had a big up day, and I do think there is probably more to come, but there's not a lot more. You've got till the dollar gets to here, and then that's probably it. So the odds are very high we're going to have a left translated cycle in gold. It'll probably test the baby bull top. Let me just switch over to the gold chart. Okay, so here's gold. This is the baby bull top. We're probably going to at least test that. We might even make it up here to test this resistance zone between 1400 and 1420. But I'm going to tell you exactly what's going to happen, and I just keep getting these right time after time. Very few people listen to me, but I'm going to tell you what's going to happen. We're going to get up here, and I would say the banks will probably make sure that gold goes above the baby bull high. That's what creates the buying panic from the gold bugs, the retail traders, the people that are very emotional about this particular asset class. And then that's where the banks dump their shares off right at the same time that these kind of emotional, unsophisticated investors begin to see a path to the moon. That's where the banks dump their shares off, and then they get caught. The unsophisticated, emotional gold bugs, they get caught at the top. Happens at every single one of these intermediate tops. It's going to happen at this one also. So listen to me when I tell you there's not a huge amount of upside left in this sector. The intermediate cycle is already getting fairly mature. So you can have a little bit of money in this sector. There is a little bit more potential. We're at least going to go to test 377, and we'll probably make it to 1400. But that's about all you got left in the metals here, because the dollar's going to hit that trend line, and then it's going to give us an intermediate degree rally that'll last anywhere from 4 to 8 weeks. And during that time, gold is going to come down, and it's going to find its yearly cycle low. So, try and do the opposite of what you always do. To think logically instead of with your emotions this time. Understand that when this breakout comes, it's going to be created by the banks in order for them to sell their shares to you at the very top. So don't let them catch you at the top again like they have it at every other intermediate top. The place to be is the stock market. In fact, it doesn't matter what it is, whether it's metals, whether it's stocks, whether it's energy, whether it's currencies. Whenever something forms a yearly cycle low, that is where you want the majority of your money. The reason is if a yearly cycle low has just formed, and typically the rallies out of yearly cycle lows tend to be the most powerful, then that is where you have the most upside potential for the most weeks. We are only 4 days into this brand new intermediate and yearly cycle, and the NASDAQ 100 has already rallied over 8%. Now, one of two things is going to happen. If I'm correct, and clearly we are getting the slingshot move out of the bottom like I predicted, and if I'm correct and we get up here and we recover these highs very quickly, I expect we'll probably do it by the time the Humphrey Hawkins address at the end of the month. That is going to signal to all of the new investors that have started to come into the market, that bought right in here and then got caught in this sell-off and either stopped out for a loss, or if they held on to it, now they're going to be rewarded for it. But once we recover this, and if we recover it very quickly, like I have been predicting, it's going to signal to them that all of these unsophisticated investors that there is no risk in the stock market. And that is the recipe to start the buying panic that drives a bubble. A bubble is driven by a lot of unsophisticated investors just hitting the ask, a buying panic. So either that is going to happen, we come up here, we recover these highs, and then we just start to go nuts to the upside, 10,000 within easily before May. That would qualify as a bubble phase. And then once you get to 10,000, like I've explained before, it's only 100% to get from 10,000 to 20,000. And those kind of moves can happen during the final few weeks of a bubble where people just start to go insane. So either that is going to happen, or if we start to slow down here, then my scenario may not be correct. It's entirely possible that we are in a secular bull market that has another 10 years to run. And if that's the case, then we'll slow down. We'll still get to these highs, but it may take us to July or maybe even September before we get to 10,000. And then ultimately, of course, we're going to go much, much higher because we would still have another 10 years of bull market ahead of us. I don't think that's going to be the case, simply because I just don't believe that's the way the world works. All of the years of quantitative easing, I just don't think the world works like that, where that kind of insane monetary policy is rewarded with a 10 or 20 year, well, I guess it would be, we're already 8 years in, so a 15 to 20 year secular bull market. I just don't think that's going to be the case. So I think the odds are greater that we slingshot back up, recover these highs, that triggers the buying panic that starts the final parabolic phase of the bubble, and we top maybe sometime in May or even into early or late June.